Hi everyone, welcome to the Power Investing Weekly Macro Review, where we take a top-down view of the markets using our 4 pillars of relative strength. So let's go ahead and jump right in and see what we can find. We're going to start by going right over to our trading view setup because we want to look at the triple play charts today in multiple time frames, starting with the weekly time frame. And as here we can see that we had a rejection this week and bearish engulfing candles here on the SPY and the QQQ. Now, it's not necessarily a full bearish engulfing pattern because it's not after much of an uptrend, but we will note that the QQQ got rejected at the MA band, so did the IWM at the lower MA band and that 209 level, even though it was the only one that really made a gain this week. And then the SPY got rejected at the 9 SMA, which is now turned down on this weekly level. Now, SPY and QQQ are still in bull ranges here, and CFGs are getting near oversold, and then the IWM has broken through, but looks kind of spiky if we can continue to get strength here. If this rejection at 209 holds, then we're likely to continue to see lower prices. Now, when we flip this down to the daily, you can see that a lot of this week was painted based on Thursday and Friday, and really Friday had a big amount to do with those weekly candles and how ugly they turned. Now, IWM again held up the best, but still is looking kind of flaggy here in a bearish nature. It hasn't broken down yet, so we could certainly see it continue to run up some or reverse the other way, but that is the general. If you're in a downtrend like this and you see a flag kind of build, then continuing the trend is the general nature. Now, on the SPY and the QQQ, both of them kind of rolled over pretty hard on Friday, came down, and now we're back into testing these bottoming ranges. Now, whether it will go and be a hard test, or since a lot of this was headline driven, be soaked back up early week, we'll just have to wait and see. But again, in a downtrend, you have to respect where it got rejected at the MA bands on all 3 of these. Now, flipping down to the 65-minute charts, the RSI bull ranges that we had ridden pretty well all week just got crushed all through in the day. Now, the CFGs are getting very oversold here pretty quickly, and the RSIs are now down in the mid to high 20s on the S&P and the QQQ, whereas the IWM actually tried to hold the 40 level here and the potential in holding the bull range, and it's just barely below 0 on the CFG. Again, that can change quickly being an intraday chart, but it is notable you're starting to see small caps perform a little better while the large caps start to take a little bit of heat here. So that's kind of looking through our macro charts or our triple play charts. Now, when we go down to the world ETF, we can see that Latin America is still leading a lot here. It has a lot of the advantage here, but when we start looking at the movers and sort here by that, or you can also sort by the gainers for the week, you have some other names that are popping up in here. A few that I saw that caught my eye was EWW, Mexico, ECH in here, Chile ETF, ARGT. Now, a lot of these are pretty thin. EWS may be in the actual gainers for the week. Up here towards the top, yeah, EWS in Singapore and EWM in Malaysia. Again, all these are kind of small, but these are some of the ones that kind of stood out this week, either by movers or actual performance for the week. The SPY under this kind of realm was number 32 out of 60, or sorry, RS of 32, with the IWM moving up. It was the 9th best mover on the week with RS, up to 15 though only, and the QQQ still sits at 5. So we're still seeing a lot of weakness in US versus these world indices. Now, when we move down to the intermarket rankings, again, this kind of gives us an idea of how the broader economic side of things go. We're seeing that commodities are still really killing it, staying on top of everything else, and we've seen that oil is still the leader with 100 across all of our RS ranking time frames. Now, other commodities are right up behind it, and we're starting to see metals come back up. Copper kind of flattened down a little bit on the week, but gold and silver both up big. And this is also with the dollar up. So the dollar, it wasn't just dollar weakness that did this. The dollar was up as well. So you're starting to see some reversals in those areas. Again, the whole idea of inflation, commodity-based move A lot of people looking at it as the commodity super cycle, which could continue to go for a while. The Dow and the SPY are kind of in the middle, and then our IWM and QQQ down at the bottom, which is still not good for the idea of equities being a leader out there. Size and style, we can see that they had a little bit of change this week because we are still value over growth, but it's interesting to see that the mega cap value dropped down from the top and regular large values up there, and the mid cap growth and micro cap are on top versus mega cap growth being down here in the middle. Again, the largest names were not the places to see any performance this week. It was really the small to mid names if you wanted to get some opportunities. The sector scenario that we're looking at here is basically small caps were clearly the performers on the week, with most of the list positive at the bottom here. You know, when we look at all three of these lists, the things that stands out is for the week, most of the small cap sector ETFs were positive for the week. Most of the, or near flat. On the flip side, on the market weighted list, only a couple of greens up here in the top, showing again that the large cap nature of things this week did not favor them after a long time of being favored. Now, we are seeing hints of broadening participation in that. And, you know, one of the areas that I like that kind of made a decent stand on the week was materials in the small and mid cap areas. So something to kind of keep an eye on there from the sector. Now, when we move over to the universe page, we'll look first at our Power Universe RSI chart, and you can see here again it's kind of like small caps has this bear flag look up into the MA bands. Now in this, it's in a little deeper to the MA bands than small caps or the IWM are, and its RSI got up out here a little bit above 50 before it kind of got rejected here towards the end of the week. Again, when you put all the different sizes together, you're not seeing near as much pain as you saw with the large caps here towards the end of the week, but it's still a bear range. It still got rejected here, so we're going to have to see buyers step in and get it above these MA bands and start moving away before we can really start looking for much more upside. Now on the breadth side of things, I would say overall there was an improvement this week, and the improvement in breadth outside of Thursday, Friday was pretty strong, and then it just got whacked back, but it didn't take it all back. Now, on the short-term measures, they're all kind of still holding above, which is nice. And then our intermediates are starting to turn, but like at the end, the rejection at the end of the week on the moving average breadth here, the 50-day got rejected at the 50 line. We'd like to see it move above that and here stay above on the MA breadth 20, so the percent above the 20-day. But we are still on a buy signal on the McClellan summation, and we are still seeing a decent look in the breadth thrust and the oscillator above zero. So again, we'll see if there was a lot of headline shock Friday or if it does spill through with continued worries into the start of the week. Now, one thing to note here on the relative comparative chart, we don't always compare the universe to these other three and talk about it much, but here, when we have a change like this, I like to note it to where we're seeing here on this last move up that it's actually flattening out versus small caps, and it's outperforming starting versus large, this QQQ and the SPY, which kind of says that we're seeing some broadening out under the surface in the markets here on this last bounce. Now, how well it holds, that doesn't tell us. We are seeing broadening out. Now, over here on the percent making new highs, new lows charts, this one I'm really just kind of disappointed with, I guess, as much as I was expecting there would be, or hoping there would be more sustained bounce and more progression through these areas. Now, we could still move, we could hit the bottom here and move back higher into a second leg, of the pattern like I had originally thought we would see. But it's looking less likely with the weakness we saw towards the end of the week. But if we do, we really got to see some more new highs cluster up here than we're seeing right now. It just doesn't look like there's a whole lot of push behind this particular move. Now, when we look at our own equal weight sectors in the power universe, we can see here that energy, materials, financials, staples, still very defensive. Materials jumped up here, was a very interesting move, had a lot to do with the big move in precious metals this week, but an 18-point jump, again, putting commodities all at the top, Then financials next, a lot of inflation-based type trades. Now, consumer staples were looking really bad coming into the week, and they did make some recovery. So from a defensive nature, that's also a small caution warning in the overall markets if this one starts to perk back up instead of the way it was looking last week, like people were starting to exit the defensive type play. So this is kind of where we are. The rotations are pretty quick. We're seeing them move back and forth a good bit, and it's hard for anything to stick right now in markets. But again, that's a downtrend, and that is where we currently are. Now for the week, the best subsectors were precious metals, industrial metals, oil and gas, hotel, restaurant, leisure goods, food and staple retailing, aerospace, and defense. So kind of mixed there, but some of the similar names still, again, very heavy commodity. But the consumer staples are really starting to perk up in some of these areas as well. All right, hope that helps, and I hope it gets you ready for the week. Everybody have a good luck this week, and we'll talk to you soon.